Do technical indicators really work in the Forex?
Yes, but you have to work them. So the industry we're in at the moment is, anyone can come along and say this indicator is the best indicator or this indicator works, but a lot of indicators are showing you a particular trigger point on the indicator, so two lines crossing or a line going above or below a midline, and then they're showing the result afterwards. So by default, they're showing you the result where it's worked, but real time, it's harder to necessarily pick one particular oscillator and be able to trade that in its own right. So technical indicators do work, but I think the golden rule would be that they work alongside price analysis and price action.
So my next question is, does technical analysis and price action play a part in the way you trade?
Absolutely. Yeah, I would say that's probably 90% of what I do.
Do you look at candles or price action?
Yes, so I look at price action. I spend less time looking at specific candle patterns like bullish engulfing patterns or dojis or all the different candle patterns. I used to spend a lot of time doing that, and when I looked at my results, it was a lot for me and the way I trade, because as I said, I'm primarily trend based. I found that's less important. So price action, yes, but price action in relation to levels, in relation to moving averages, in relation to a combination of that with pivots, as opposed to specific candle patterns.
So do you use levels of support or resistance?
Yeah.
And are there any technical indicators that you use?
So primarily I'll use, as I said, I'll use moving averages and pivots. I will look at MACD and RSI now and again, but that's more for my swing trades as opposed to my day trades. So I call them price studies, so I'm more focused on what is happening on the chart rather than what's happening below. So oscillating indicators or stuff below there, that's less relevance to me.
Do you favour any particular technical analysis systems like Bollinger's or?
So for me, it's moving averages, and I think that's purely because of the people that I've learned from. So moving averages and pivots, I think it's simply because they use them. I can't sit here and say they're any better than any other, but they work for me, and I've made them work for me. And I think for a lot of indicators, it's what you can see and what you relate to. So I work with students that, despite the fact I use moving averages, I don't force it on them. Some of them like to use Fibonacci retracements because it works for them. So yeah, for me, I prioritise those two.
Do you have any of your own rules?
Yes. So my rules are more around the trade management element and are more around the entry and exit element. So I'm not trading anything weird and wonderful. I'm basically trading trending pullbacks, but I've made those pullbacks, I've made them my own through a lot of testing and hard work.
Some traders use MACD oscillators, exponential moving averages for their trading systems. Are these all lagging indicators though?
Moving averages are technically defined as lagging indicators. So yeah, I will use MACD now and again, and I use exponential moving averages. But it's not so much whether they are lagging or not, it's whether or not it's how you're using the indicator. So, a lot of people say, well, you can't predict the market with an indicator that's lagging, but I'm not using the indicator to predict the market. I'm using the indicator as part of my strategy criteria. The classic one with moving averages is you wait for two moving averages to cross, and once they cross, you enter the market. But the argument there, and I've tried that, the argument there is that by the time they've crossed and you get in, prices move to a support level and the trade loses. Yet there will be traders out there that use moving average crosses and they work. So the fact the indicator's lagging, to me, isn't the issue. You're not trying to predict what's going to happen. You're just using a set of criteria that give you a bias, and over time, over 100, 200, 1,000 trades, that bias is in your favour in terms of how many winners you get and the size of those wins.
Is it true that most trades depend on a moving averages system?
No, it's difficult to say. Mine does, because that's one of my criteria. I think moving averages are useful if you're trend based, simply by using the 50 moving average and being either side of that. The general rule is I won't go long unless we're above the 50 moving average if I'm a trend based trader, and I won't go short if unless I'm below the 50 moving average. So rules like that can be useful. But a lot of people do use moving averages, but I wouldn't say every system is reliant, because it depends on what type of trade it is.
What are your moving averages based trading techniques?
So Mine, whether it's day or swing, if I'm trading with the trend, I use the same 3 moving averages, and I'm looking for the same thing to happen. So I'm looking for what's called moving average confluence. So the lower moving average, the lower in time, has to be, if it's a long trade, has to be above the next one and the next one. So they all have to sit in confluence, and they have to look nice. I know it sounds weird, but I won't trade if a market's choppy and by definition, the moving averages are going to be all over the place. So for me, regardless of whether it's swing or day, if I'm trading with the trend, I want the moving average confluence.